Good morning, everybody. Welcome back to the Wilton Report, episode number something. I actually forget. It doesn't matter. Today, we're going to talk about the rental market we're going to talk about the rental market in general, and then we're going to go into some micro level detail in Princeton. I'm going to give you a little bit of a forecast as to what I think is going to happen. I'm going to share data from what a lot of other experts, much more expertise perhaps than I do on the national scene, think is going to happen. So we'll kind of get right to it. So again, these are the real estate headlines. What is going on? And this is more in the resale market. The rental market, unless your landlord, tends to be, I don't want to say an afterthought, but if you're a landlord and you have a capital investment in real estate where you're looking to make a profit, rental pricing is quite important. If you're a tenant, rental pricing is quite important. If you're priced out, perhaps, of buying a house because of the recent interest rate hikes, rentals are quite important. So let's get to it. We'll talk about what's happening. This is going to be more of a conversation. Again, if you're tuning in on YouTube, great. If you're not, please feel free to check out YouTube because you can check out the slide deck that we've prepared for you, but welcome regardless. So this was June, this forecast, and I actually saved this article. So the prediction was rent growth is predicted to outpace home sales price growth in 2022. Renting may become the less affordable option. So that was in June, right? So first-time home buying at the time was more affordable than renting. I think that changed this week for a lot of people with the recent interest rate hikes to 6. Now, I will tell you, comparatively, 6 is really not that high. It's shocking for those of us who have lived in a low-rate environment for the past, 10, 15 years. When I started in real estate, rates were 10. And when they went below double digits, people were like celebrating with like corks and champagne and stuff like that. So really 6% is not that high, just so you know. Short term, it's high compared to what we had. Long term, it's actually under the normal average of 7.5. So the prediction was that renting could become less affordable than home buying. So what happens now with a really, really sudden interest rate hike, perhaps another interest rate hike predicted in the fall? And this is, this morning's headline. So mortgage rates surpassed 6% for the first time since 2008. So borrowing costs have doubled in the past 9 months as Federal Reserve has increased interest rates. And again, this is an attempt to battle inflation. I think, unfortunately, they're trying to battle inflation by raising interest rates and tampering demand. The big part of inflation is rental pricing. Rental affordability is a big problem. And when nationally you're undersupplied by millions and millions of homes, rental prices will stay high. I mean, that is kind of what happens when, you're undersupplied in housing, right? That's just what it is. So, here's a question. I literally, what happens when interest rates go up? I put it right into Google. It took me to marketplace.org. Higher interest rates may not make a dent in rising rents for more than a year. And this was actually July 12, 2022. This article was written. Rents, depending on your data source, are in the low double digits nationally. That's appreciation. And I'll show you some data locally. Like, my God, they're contributing mightily to inflation. So the ironic part, what the Fed is doing by raising interest rates is they are going to tamper builders from building homes. Builders do not like to build homes in market uncertainty, which is going to exacerbate the national housing shortage. It's kind of crazy. So we'll see what happens long term, right? Factors that drive up rent prices, pretty basic. Reduce new multifamily and housing construction. I will say in Princeton, we have some pretty cool projects coming online. We have projects at the shopping center, rentals. We have Thanet Drive, which is Avalon. The people that everyone in Princeton love to hate. They have a new rental project coming on in Thanet Drive, which is north of the shopping center. So there's the redevelopment at the seminary, or the housing seminary college on the west side of Princeton. So there is a fair amount of rental product coming online in Princeton. The issue is it's not resale product, so it's not going to alleviate the housing crunch. It's going to probably flatline rental appreciation in the midterm, not in the short term. So reduce new multifamily and house construction. There is no housing construction locally unless it's really big. The ADU will help that a little bit. Home prices in many cities continue rising. Yes, they do because it's undersupplied and underbuilt, especially in Princeton in the downtown area. So again, rising financing, mortgage costs for rental owners. So if it costs more to buy, it's going to cost you more to rent. It's just what it is. Rising property servicing costs, rising taxes. Taxes generally don't go down. Increasing demand from buyers who wanted to buy in the past tense. So when you are in a rising rate environment, a decent chunk of buyers will just sit on the sidelines and they will not buy a house. They will rent for a couple of years. I met a young couple yesterday. Don't know they could buy in Princeton, but they're going to rent in Princeton. They'd like to rent for at least 3 years before they think about buying. And this is a young family, 2 little kids, and they're committed to renting for 2 to 3 years in Princeton. So walk the town location, actually. So bigger demand for single family houses and very limited house supply. Well, that's endemic of our market because we are built out. More rental properties being bought by corporate investors. That is that's like a 10 episode series, like how institutional investors are really changing the housing market. And I don't think it's a negative thing. It's just, when in doubt, build more housing. So U.S. rent prices hit new records again. So this is from June 2022. Again, the national rental trends are just tough, right? There's not enough supply. There's not enough being built. The interest rate hikes will prevent more housing coming online, even rentals, because it costs more to borrow money to build a project. So you just have a lot of things that are just kind of like creating this perfect storm for rental prices for tenants. Unfortunately, landlords are enjoying it, but that's kind of the national picture. So the national picture or the national sentiment is you're not going to see like a huge rent relief or a huge rent drop in the near term. Maybe in the long term, I don't particularly see it, but that's the kind of the sentiment nationally is that things are just really going to stay the same. Perhaps you won't see the massive appreciation in rental pricing, but you will not see a pullback in rental pricing. So this is Princeton in August of 2021 versus August of 2022. And the reason I'm kind of going to show you and fix on that month before we do the year over year trend, it's the most recent data, right? It is the most recent accurate data that we can see. So in August of 2021, 28 rental units were listed in Princeton. This is on the MLS. This is not including Avalon or the private entities who transact business in Princeton. So 28. In August of 2022, 14 were listed, half. So again, supply is down by half. Renters are staying in place longer. 2 and 3 year leases became so commonplace in the last couple of years. There is less supply in the market. So inventory in August was down 50%. That's catastrophic for a tenant. Great news if you're a landlord. The listed median average in August of 2021 was $4,075. The median listed average in August of 2022, and I'm not laughing, by the way, to make light of this. This is just staggering numbers, is $4,750. It's almost a 25% jump in a year in the average listed price of homes, any home in Princeton. 18 were pended. So here's the interesting thing. So in 2021, 28 rental units came online. 18 went under contract, pended. This year, August 22, 14 came online, 18 went under contract, pended. They're renting the same amount of less inventory. So again, the near-term projection is rental prices will stay high and probably increase. Last year, not surprisingly, they closed 36. There was just more supply. This year, they closed 31 out of less supply, and days on market came down 3 days. So that's the August data, and a 25% increase in 12 months is massive. So pretty incredible numbers. Let's look at the year-over-year data. So year-over-year, through the end of August 2021, 166 rental properties came on the MLS in Princeton. That's the Princeton School District. It's not West Windsor. It's not Plainsboro, Lawrenceville, whatever. The listed median price was $39.75, $3,975. 101 went under contract, 126 closed. I shouldn't say sold, closed. They took 40 days on average to rent those units. Okay. August of 2022, 136 came on the market versus 166 last year. Supply is down. The listed median price is $4,500 from $3,975 last year. It's a massive increase in asking prices. The number of pendings obviously went down to 77 from 101. So it went down by the same number that came on the market, same fewer number, I should say. Units that closed is 132, which is incredible considering there's less inventory on the market. They're still closing more rentals in town. And days on market went down to 26 days on market from 40. So that is the year over year snapshot in Princeton. I don't see a massive change in those numbers because there's just not enough supply to meet demand. So that is the rental forecast for September on the Wilton Report. Thank you for joining us. Again, if you're on Spotify or Google or Apple Podcasts, you can check us out on YouTube. And if you're on YouTube, obviously feel free to check us out on the others. And we're available on Instagram, LinkedIn, and Facebook. So thank you, everybody. Have a great day. And we'll see you here next week.